Wall Street makes money by convincing you investing is complicated. The truth? It isn't. I see it everywhere. People hunched over their phones, checking the Robinhood app every 5 minutes. They're sweating over stock picks, wondering if they're smart enough, if they should trust some expert on TV who's screaming about the next hot thing. They look at Wall Street like it's an oracle. But here's the dirty little secret. Wall Street is not in the business of making you rich. It's in the business of making itself rich by keeping you confused, insecure, and forever chasing the wrong game. I've lived long enough, made and lost enough money to know that complexity sells, but simplicity builds wealth. Investing isn't about mastering some secret formula or having an Ivy League degree. It's about discipline, patience, and understanding a few timeless truths. That's what I want to share with you today. 5 simple truths about investing. Truths that the suits on Wall Street hope you never discover. Because if you did, you'd stop paying them fees, you'd stop panicking every time the market sneezes, and you'd finally see that wealth isn't reserved for the geniuses in glass towers. It's for anyone with the courage to stay the course. So let's peel back the curtain. Forget the noise, forget the games. Let me show you what investing really is, stripped down to its core. 5 truths, no jargon. Just the kind of wisdom I wish someone had whispered to me when I was young. I once knew 2 men, both ordinary guys, both working 9-to-5 jobs, both with the same dream, to retire without fear. The first man, we'll call him David, kept things boring. Every month, without fail, he put a slice of his paycheck into a simple index fund. No drama, no fireworks, just steady contributions, rain or shine. He didn't talk about it much. He didn't brag. He just went about his life, raised his kids, took his vacations, slept well at night. Now, the second man, Tom, was different. Tom was convinced that the secret to wealth was knowing more than everyone else. He followed the experts, he subscribed to newsletters, watched financial TV like it was gospel, and chased hot tips like a gambler chasing a lucky streak. One year he was into tech IPOS. The next it was gold, then crypto, then back to whatever Wall Street was shouting about that week. His life was a roller coaster. Adrenaline, sure, but also anxiety. Late nights staring at charts, wondering if he'd blown it again. Fast forward 30 years. Who do you think ended up wealthier? It wasn't Tom, with all his insider knowledge. It was David, the quiet one, the boring one, the one who ignored the noise. His simple, consistent strategy compounded quietly in the background, turning small habits into a fortune. And while Tom was still chasing the next miracle stock, David had achieved something Tom never touched: peace of mind. And that's the real lesson. Wealth isn't just numbers in a brokerage account. It's freedom from worry, freedom from the circus of constant predictions. Wall Street thrives on making people like Tom dance. But the truth? You don't need their dance. You don't need to be a genius or have secret information or ride every trend. You just need patience, discipline, and the courage to keep things simple. So when I hear people say, investing is complicated, I smile, because I know better. I've seen better. And if you're willing to see through the myth of the expert, you'll discover it too. Which brings me to the heart of this conversation. 5 simple investing truths the industry doesn't want you to know. You know, if I could sit every young American down in a quiet little coffee shop like this one, I'd tell them something simple. Wealth isn't complicated. It's just hidden under layers of noise. Wall Street wants you distracted, dazzled, and dependent. But peel back the curtain, and you'll see 5 truths so obvious, so powerful, that once you understand them, you'll never look at money the same way again. Let's go through them, one by one. Truth number 1. Compounding is the 8th wonder of the world. Albert Einstein, yes, the same guy who gave us relativity, once called compound interest the 8th wonder of the world. He said, "Those who understand it, earn it. Those who don't, pay it." Now, most people glaze over when they hear compounding. It sounds like math, and math makes people nervous. But compounding isn't about equations. It's about time, patience, and the quiet way small habits grow into life-changing results. Let me paint it for you. Imagine 2 friends, Sarah and Jake. Sarah starts investing $300 a month at age 25. Jake, on the other hand, waits until 35 because, of course, life is busy, bills pile up, there's always a reason to delay. By 65, assuming a modest 7% annual return, Sarah ends up with over $720,000. Jake, about $340,000. Same contributions, just 10 years late, and yet the gap is nearly double. That's compounding. Time is the multiplier. It rewards patience. It punishes procrastination. The irony is, we live in a culture addicted to instant gratification. We'll binge an entire Netflix series in one night, but the idea of waiting decades for a payoff? Forget it. Yet that's where real wealth hides, not in jackpots, not in gambling on the next hot stock, but in small, boring, disciplined actions repeated over time. Compounding whispers a truth most people never hear. If you start early and stay steady, you don't need to be rich to end rich. Truth number 2. Index funds beat most experts. Here's a little secret. Wall Street doesn't want you to know. The majority of experts aren't very good at their jobs. Don't believe me? Over a 15-year period, more than 80% of professional fund managers, the guys with the suits, the degrees, the expensive research, fail to beat the S&P 500. 8 out of 10. Imagine a surgeon bragging about a 20% success rate. You wouldn't let them near you. But in finance, they still collect their fees while you carry the risk. And that's the game. Wall Street doesn't profit when you win. They profit when you trade, when you churn, when you pay. Their product isn't returns, it's confusion. The more complicated they make investing seem, the more you feel like you need them. Now contrast that with index funds. They don't try to outsmart the market, they just are the market. An S&P 500 index fund simply owns the 500 largest companies in America, in proportion. No wizardry, no predictions, no hot tips. Just capitalism on autopilot. And here's the kicker. Over time, that humble little index fund usually beats the fancy hedge fund, the clever stock picker, even your friend who swears he's got the next Tesla. Why? Because simplicity wins. Complexity bleeds you dry with fees and mistakes. The truth is almost comical. The average American could outperform the average Wall Street professional just by buying a cheap index fund and leaving it alone. But of course, no one gets rich selling you that advice. Truth number 3. Diversification protects you from yourself. Let me tell you a story. A friend of mine once bet his entire retirement on a single company stock, the company he worked for. He said, "Why not? I know this business better than anyone. It's safe." 2 years later, the company went bankrupt. That's the danger of putting all your eggs in one basket. One bad bet can wipe out decades of savings, And it doesn't take a fraud like Enron or a meltdown like 2008. Sometimes it's just bad luck. A product fails, leadership changes, technology evolves. Diversification is your shield against all that. Spread your investments across hundreds, even thousands of companies, and no single disaster can sink you. You're no longer at the mercy of one CEO, one industry, one economy. But diversification protects you from something even more dangerous than Wall Street. It protects you from your own emotions. Because let's be honest, we're all human. When your one golden stock plummets, panic kicks in. When it soars, greed takes over. Either way, emotions drive you to act against your own long-term interest. But when your money is spread out, no single swing rattles you enough to sabotage yourself. And here's where index funds shine again. They give you built-in diversification. One purchase, and suddenly you own a slice of Apple, Amazon, Coca-Cola, hundreds more. You've got protection baked right in. Think of it like this. Diversification isn't just about avoiding disaster. It's about buying peace of mind. And that peace of mind? That's priceless. Truth number 4, time in the market beats timing the market. Here's a game I've seen ruin more people than any casino, trying to time the market. Everyone thinks they can outsmart it, buy low, sell high, dodge the downturns, ride the upswings. It sounds so logical, but here's the brutal truth. Nobody does it consistently. Not the gurus, not the analysts, not the talking heads on CNBC. They'll predict a dozen crashes, and when one finally hits, they'll crow, "See, I told you so." Meanwhile, they were wrong the other 11 times, and if you'd followed their advice, you'd have missed years of growth. The numbers are damning. Miss just the 10 best days in the market over a 30-year period, and your returns are cut in half. Half. And do you know when those best days usually happen? Right after the worst days, which means if you panic and pull out during the storm, you miss the sunshine that follows. The lesson? Stay invested. Time in the market beats timing the market every single time. It's like farming. You don't dig up the seeds every week to check if they're growing. You plant, water, and wait. The harvest doesn't come to the impatient. But patience is rare in America today. We've been trained to crave quick wins, instant gratification, zero-to-hero stories. The market doesn't care about your cravings. It rewards those who endure. So stop trying to outsmart the clock. Sit with it. Let time work for you, not against you. Truth number 5. Discipline beats IQ. This is the final truth, and maybe the hardest pill to swallow. Investing success isn't about being brilliant. It's about being consistent. Wall Street is full of geniuses who still lose money because intelligence is no match for emotion. Fear and greed have bankrupted more smart people than stupidity ever has. What wins is discipline. The ability to set a plan, stick to it, and ignore the noise. To keep investing when markets are down, when headlines scream doom, when everyone else is panicking. To avoid the temptation of chasing fads, chasing tips, chasing the illusion of easy money. The boring investor, the one who quietly puts money into index funds, month after month, year after year, often beats the brilliant investor who's too clever for his own good. Why? Because discipline compounds just like money does. Every decision you don't mess up becomes a building block. Every moment you resist panic adds to your fortune. And here's the philosophical core. Investing isn't about beating other people. It's about not beating yourself. It's not a competition. It's a test of endurance, of patience, of character. In a world obsessed with flashy wins and overnight success, the disciplined investor plays a different game. And over decades, that game wins. So there they are, 5 simple truths. Not hidden, not complicated, not requiring insider access, just patiently ignored by a culture addicted to noise. Compounding, index funds, diversification, time in the market, discipline. The boring, obvious, almost laughably simple truths that quietly build wealth while everyone else is chasing the next shiny object. Wall Street won't tell you this, because if they did, you wouldn't need them. But now you know, and once you know, you can never unsee it. The choice is yours. Play their game, or play the long game. What does this really mean? Most people still think investing is about stock picking, like you're some kind of Wall Street cowboy riding into the market, lassoing the next Amazon before it takes off. That's the myth, sold to you because it keeps you nervous. Nervous people pay fees. Nervous people chase tips. Nervous people make Wall Street rich. But here's the reality. Investing isn't about picking stocks. It's about managing behavior. When you peel back all the noise, investing is painfully simple. Put money in, leave it alone, let compounding do its slow, relentless work. The only real complication? You. Because here's the thing. The market isn't your enemy. Your impulses are. The temptation to sell the moment the headlines scream recession, the itch to buy because your neighbor doubled his money in crypto. That tiny whisper that says, you're missing out. Those whispers cost more wealth than any market crash ever could. Investing isn't gambling. It's planting seeds. You don't dig up the soil every morning to see if something sprouted. You plant, you water, you wait. Time is the sun. Discipline is the rain. The harvest doesn't come to the clever. It comes to the consistent. I've met people with PhDs in economics who still blew up their portfolios chasing the next big thing. And I've met janitors, nurses, teachers, ordinary folks who quietly built 7-figure nest eggs by doing the boring thing, putting money into index funds year after year without blinking when the market dipped. That's the paradox nobody tells you. In investing, the boring path is the brilliant path. So what does this really mean? It means the game isn't about intelligence. It's about patience. It's not about timing the market. It's about outlasting your own worst instincts. The moment you see that shift, the weight lifts. You don't need to outsmart Wall Street. You just need to stop outsmarting yourself. And that's where the real work begins. Not in picking, but in practicing. Not in chasing, but in holding. So how do you actually put this into practice without getting lost? That's what we'll talk about next. All right, let's strip away the smoke and mirrors. Because after all this philosophy and big picture talk, some of you are probably thinking, okay, Sage, I get it. Compounding is magic. Discipline matters. But what do I actually do when I sit down at my laptop? Where do I click? Let's make this brutally simple. Step 1. Open a brokerage or retirement account. If your job offers a 401k with a match, that's free money, take it. If not, open an IRA or a plain brokerage account. Vanguard, Fidelity, Schwab, doesn't matter. Pick one and move on. Don't get stuck in paralysis by analysis. The hardest part is the first click. Step 2. Automate monthly contributions. This is where you protect yourself from yourself. Because if you leave it up to willpower, life will always get in the way. There will always be a vacation, a gadget, a shiny new car whispering your name. But if money leaves your checking account before you see it, the temptation never wins. Think of it as paying your future self first and letting today's self figure out how to live with what's left. Step 3. Stick to low-cost index funds. Forget the hot stock tips from your barber or that guy on YouTube waving his arms around. Just buy broad-based index funds. The S&P 500, a total U.S. market fund, maybe sprinkle in an international index if you want global exposure. That's it. Low cost, low drama. You'll own a piece of thousands of companies without having to pretend you're Warren Buffett. Step 4. Reinvest your dividends. It sounds small, but it's everything. Those tiny checks add up. Think of it like planting new seeds every time the tree drops fruit. Over decades, that reinvestment is what makes your portfolio snowball. Don't cash them out. Let them compound. Step 5. Resist lifestyle inflation. This is the silent killer. You get a raise, you feel richer, and suddenly that old car looks a little too old. The apartment feels a little too small. Before you know it, the money you thought you'd invest is now trapped in a higher mortgage and leather seats you don't even notice after 2 weeks. The antidote? Every time your income goes up, increase your contributions. Make wealth rise with your paycheck instead of your expenses. Let me give you a simple picture. A 25-year-old who invests $500 a month consistently into boring old index funds will cross over into millionaire territory by retirement without winning the lottery or working 90-hour weeks. That's the quiet power of compounding. It doesn't care if you're brilliant. It doesn't care if you're lucky. It only cares if you show up. Now, notice what's missing here. I didn't say follow charts. I didn't say time the market. I didn't say study technical analysis until your eyes bleed. Because that's not investing. That's entertainment with bad odds. Real investing is painfully, almost embarrassingly simple. But simple doesn't sell books or keep Wall Street rich, so they convince you it's complicated. Here's the truth. You don't need to be the smartest person in the room. You just need to be the most consistent. And that's the mindset shift. Money doesn't grow because you outwit the system. It grows because you refuse to quit. So, where do we go from here? We've laid out the truths. We've stripped the myths. We've put the tools in your hands. Now it's time to step back, breathe, and ask, what does this all mean? Because investing isn't just about dollars and cents. It's about what kind of life you're building. Let's talk about that next. You know, if you strip away the noise, investing is actually simple. But Wall Street doesn't want simple. Wall Street wants you confused, because confusion is profitable. Every chart, every screaming headline, every exclusive insider strategy, that's not for your benefit. That's bait. They keep you chasing complexity, so you never notice how freedom is sitting quietly in the boring path they won't advertise. And here's the truth I've learned after watching people ruin fortunes and rebuild lives. Simplicity is freedom. You don't need to be clever. You don't need to be first. You need to be consistent. You need to keep showing up for your future self, even when it feels dull. Wealth isn't built in a frenzy. It isn't found in that one hot stock tip or in the friend of a friend's crypto coin. It's built in quiet years, disciplined years, like a tree, planted once, watered often, left alone to grow tall. That tree doesn't tweet about itself, it doesn't brag. It just gets stronger day after day, season after season. That's how real wealth works. You won't feel like a genius in the first 5 years. You'll feel average, maybe even behind. But then, suddenly, decades later, you'll look up and realize your boring, quiet consistency made you free. Free to choose, free to walk away, free to live on your own terms. So let me ask you something, not as a lecture, but as someone who's been through the noise and come out the other side. What's one money habit you know you should start today but haven't? Automating your savings, cutting back on the lifestyle creep, opening that account you've been putting off? Don't just nod and say, "Good idea." Share it below, make it real. When you speak it out loud, you claim it. And if this conversation stirred something in you, subscribe to this little corner I call the Bridge Within. Here, we don't do tips, we do truths. About money, yes, but also about freedom, meaning, and what it takes to live without regrets. Because money isn't the goal. Freedom is. And freedom, well, that starts with you.